right, good morning, everyone. Appreciate you all joining us. Um, I want to introduce Scott from Sykes and Company. So Scott Sykes is a CPA, and I'd say that anybody in the independent pharmacy space has probably heard of you, Scott. So don't need much of an introduction. But I just want to say before you start, appreciate you taking the time to talk to our members. And we have folks from Kentucky, and there might be a few people from Indiana on the call as well. So again, thank you for taking the time to talk to us today. So I'm going to go over some best practices for accounting for DIR fees and hopefully provide some information to help pharmacies better prepare for first quarter of 24. So
Yep.
I'll turn it over to you.
Thank you, Ben. I certainly appreciate the opportunity to be here with you today and with the members of the Kentucky Pharmacy Association. Great. We got a lot of great clients there. It's a beautiful state, and I'm just happy to be here with you today. Got a nice intimate crowd, which is nice. If you have questions, pop them right in, and we can answer those as we go along. I'm happy to do anything I can to help and provide some information to help you in your pharmacy. So we are DIR fees, hot topic right now, as you all know, and has been for a while. So we're going to dig into that today. Disclaimer, this is all educational purposes only. Please speak with your own professionals and advisors, etc., before acting on anything. Just a quick little blurb about who we are. We service only pharmacies all over the country. We eat, sleep, and breathe this stuff. So we're talking to pharmacists every single day. So we get a good pulse on what's going on. And we work real hard to take the best care of our pharmacy clients. So you guys can take care of your patients and we take care of you. That's kind of how we like to look at it. We do offer a wide variety of services. You're welcome to look at those at any time. One I will point out is the ARCS assessment service here. This is a one-time service we do offer where we take your accounting file and your tax returns and overview that and get you on a video call, kind of like what we're doing here today, and walk through your current situation and give you kind of that advisory feedback on your accounting and tax situation in your pharmacy. And then you can take that information, do whatever you wish with it. And it's just a one-time service. So that's a pretty popular thing we do. So DIR fees here. So, obviously it's reality. Complaining is only going to get you so far and where we are today. So we just have to learn to deal with it and navigate around it. So the DIR fee, the CMS was concerned that rebates weren't being captured at point of sale, and then PBMs around 2010 really started to figure it out and started playing the games with it. And we really saw DIR fees kick in 2014, 2012, maybe here and there. And then like by 2015, 16, it was showing up everywhere. And then of course, we are where we are today. There's mainly two kinds of fees: the administrative performance fee and the flat fee model. And of course, with the performance fees, the PBM has control over those performance metrics. So, and they have a lot of control over all of them, but, that's kind of where we are today. So with DIR, the trends, they're continuing to grow in size as a percent of revenue. So they are now the third largest expense in your pharmacy, behind cost of goods and your payroll. And so about 2020 averages, this is our own data, was around 2.5% of revenue, gross revenue. 21, 3.5, 22, 4.5, and it's probably going to be 5.5 and 23. We usually start gathering our data for DIR fees through March or April when that trimester kicks in for Caremark. So this summer, I'm sure we're going to have an update on really kind of where we think 23 is going to fall, but so far it's looking like it's going to be in that 5.5% range here. So we are trickling up higher. Some DIR fee accounting, how we handle that. DIR fees should absolutely be on your books and records. We hear a lot where, I don't have them on my books. And, my bookkeeper says I don't need to because of the way we're handling the transactions. And, they're right about that. But by not getting the DIR fees in your accounting file, you're not able to track those trends we just went over. You're not going to really see where you are as a percent of revenue. And be able to track those trends. And then being this is your third largest expense in your pharmacy, you need to know what it is. And so we absolutely think it should be included on your books and records. And essentially it's a journal entry every month. At the end of the month, hopefully you're using a reconciliation system and you're going in and you're pulling the DIR fee data from the because those reconciliation systems, they pull those 835s and they're doing the reconciliation piece, which by the way, you need to be managing those systems. You can't just have that system in place. You have to actually manage it and have a team member kind of responsible for making sure the reconciliation's taking place, that any paper checks are being uploaded, that you're verifying deposits timely. Timely is a big thing there because you'll see, sometimes you'll see a pharmacy where they'll verify the deposits once a quarter. And I mean, if you're doing monthly accounting, you can't do once a quarter because it just skews your receivables big time. So getting in there timely, having somebody responsible for that, building a relationship with your reconciliation company, whoever that representative is there, and managing that. But when you do that, the 835 information is being pulled and they're pulling out those DIR fees. And then you can pull a report to see where see what the DIR fee is. And then you're just making a journal entry to get that in your accounting system. Because
Scott,
yes,
if
sir.
I can chime in here.
Absolutely.
When you're doing the journal entry, is this, is this showing up as should you put your DIR in as an expense, or is this a reduction? Should you reduce income, debit income, or do you put it in as an expense, or do you put it in there? Does it somehow impact your cost of goods? Like where's the best place to put that in your financials?
That's a great question. So when you're collecting from the PBMs, they're net. So the DIR fees already taken out. And so we want to gross up revenue. So you're going to credit your revenue, gross it up. And then you're either going to expense it out as an expense, DIR fee expense, or that line item can be in cost of goods, or it can be a net against revenue. So there's no right or wrong way on where that DIR fee expense goes. There's no right or wrong way. We show it as an expense, an operating expense. Some people like to show it against cost of goods as a cost of goods. Some people like to show it as a net against their top line revenue. We like to show it as an expense. The reason being is we want to see your gross revenue. We want to see your cost of goods, prescription cost of goods. We want to know what that margin is. That is a key key performance indicator in your pharmacy, the number one key performance indicator. So I want to know what that actual gross margin is. And then I want to be able to bake in and look down and see, all right, there's my DR fee. So that's kind of how it impacts that. If you're doing it, if you're putting the DR fee against revenue or cost of goods, that gross margin's kind of already adjusted. And I want to see just a gross margin at gross margin. So there's no wrong way to do that. That's just, how we personally like to do it. And I know some others out there disagree with that, and that's fine. Because again, there's no wrong way.
So follow-up question on that
Yep.
is, does it matter if you're on accrual or cash basis on how you account for these?
It does not matter. The DR fee item is a cash basis item. It's almost impossible to accrue DR fees because you don't really know what they are, at the time. So it's an after the fact cash basis adjustment that's being made here. So whether you're accrual or cash, you're still going to have that in there. So it doesn't really matter which accounting method you are under. That being said, on accounting methods, with the Tax Cuts and Jobs Act of 17, pharmacies, generally speaking, can be cash method for tax purposes. But from an accounting perspective, on your day-to-day, month-to-month accounting, we want to see, this is how we do it. We want to see accrual numbers. We want to see those receivables in there. Definitely inventory's got to be on there, payables. That's going to give you the most accurate picture of what's going on in your pharmacy from a month-to-month basis, and give you that that most accurate information that you can then use to help better manage your pharmacy. And that's why receivables, I mentioned, that is such a big component of that, and staying on top of that. I mean, that is your biggest unreconciled bank account if you're not paying attention to it. And we have several instances where we've seen monies go to a different bank account at somewhere else, payments not coming through because of whatever. So it's fairly common to see issues with reimbursements. Those reconciliation systems can help identify that. So the hope you're getting the hope you're getting paid method is a risky way to do it. But that, again, that journal entry is how we would do it. It would be a credit to your revenue, and then a debit would be the expense line item. So then you're going to have, that good gross margin there. And then you're going to be able to see, all right, my DR fees are 6% of revenue or 5%, whatever it is. But again, we encourage everybody to get that in there if you can. So as we know, there's going to be some changes coming in 2024, and I've heard the apocalypse, I've heard the cliff. You hear all these terms. I think the cliff is probably the most accurate way that I like to talk about it. So the DIR lowest net price is going to occur at the point of sale. So at the point of sale, it's going to be showing you the lowest net price. You're still going to, you're still, when you get it reimbursed, it's still going to be the same. I mean, you're going to get whatever you get, the DR fee is going to come out of that before you actually get paid, minus Caremark. So Caremark is the whole kink in this whole thing, which is going to, well, I think a cliff is an appropriate term, because Caremark is the only payer that I'm aware of that, does it trimester. And so they're going to have to start doing it, at that point of sale at adjudication. And so you're going to get in 2024 around March, April, May, you're going to get, you're already going to be getting lower reimbursement up front from Caremark, but then you're going to get that 2023 Caremark retroactive DR fee. So you're going to kind of be getting doubled up there. And that's where that cliff is going to hit. And so that's, first quarter, I'm going to say March, April, May is kind of what I'm thinking based on what you typically see with Caremark. And this is all my understanding. I'm not a pharmacist, and I try to do my best to keep up with this stuff, but this is my understanding on how all this works. So what can we do to plan for that? So it's kind of like a 4-point plan that we think, and the first item is that fundamental accounting. But before I get to this, when I mentioned that Caremark is going to hit, in March, April, May of 24 from the 2023 clawback, and then you're also going to have that 2024 kind of at reimbursement cut. You're going to have that double down at that time. And so when you're thinking about, how can I plan cash flow wise for that? What I'm kind of recommending is that you look at January through maybe May of this year, your Caremark DR fees, and you add those up and multiply by like 2.5. And that's probably going to give you a good idea of that additional cash flow you're going to need, or that you're going to want to have. So when we're talking about like a specific way of knowing, like right now, that's kind of what we're out there planning for. That could change as we move along. But right now, that's kind of what we're thinking, to give you an actual hard figure of kind of what cash do I need to have ready. And so, but your accounting fundamentals are huge, or just play such a tremendous role in this, because you have to know where your numbers are. You have to know your cash flow in your pharmacy. And the fundamental accounting is paramount to that. So when you're facing these cash flow issues and planning for it, you can't do it without fundamental accounting. So this is step one. If you don't have this in place, you absolutely have to do it now. You don't have a choice. You got to figure it out. You got to get with somebody. Let's see, what do I have on here? Yeah, I mean, pharmacy metrics are already tight. So there's already an inherent cash flow issue in pharmacy. You're getting paid 21 days, after you adjudicate, but your wholesaler is due in 10 or 15 days. And so you're already facing a cash flow issue at the very onset. So knowing this cash flow and how it all works between the profit and loss and the balance sheet and the debt service and things like that gives you a picture of kind of where the areas you need to address and how to best plan. And when we talk about accounting fundamentals, it starts with the balance sheet. So, if you're kind of wondering, well, where do I start with the accounting fundamentals? You start with the balance sheet. You take your balance sheet at the end of a month. You probably want to start, if you don't really have any idea, you probably want to start with the year end of 2022 and pull that balance sheet year end 2022. And then you go down each account, and you need to be able to say that number's pretty spot on. And I know it is. And if you can have a work paper that backs it up, if you're showing inventory of $250,000, hopefully you have a perpetual inventory system that shows your inventory was actually 250. If it's 450, then you've got a big issue there. And just go down the line item, go through those payables. Do you have a bunch of accounts payables from, over 60 days that's never been cleaned up? Do you have a lot of outstanding checks in that bank account in your accounting system that have been double, that are double checks or what have you? Are you actually showing what's payable to your wholesaler at the end of the month? We see that a lot. Are your notes and bank notes tied down, with the statements? Are you recording the right principal and interest portions? And then one of the key areas of that balance sheet you're going to see is that equity. Does that equity section of my balance sheet, it'll be on the bottom of your balance sheet, does that reconcile with what's been filed for taxes? And you should have a reconciliation between your equity on your books and your equity on your tax return. And there should be some form of reconciliation that shows that those two agree. If one's cash and one's accrual, for example, you should still have a reconciliation that shows that when you switch between both, you can get the same equity number. That equity is a big area, because what you'll see commonly is that the tax preparer will make adjustments on their end, on the tax side, and file a tax return. But those adjustments never get to the pharmacy in the pharmacy accounting system. So you have two books, you have two sets of books and records there. The CPA's got his accounting books, and then you've got your accounting books at the pharmacy, and they don't talk to each other. So you got to make sure that, what's been done for taxes, can reconcile back to your books at the pharmacy. If you're using QuickBooks Online, something like that, hopefully that's kind of already being done. But those older accounting systems, where you have to exchange a file or a thumb drive or something, that's where you can commonly see those issues. But that's something, that's kind of just the 101 of getting that balance sheet. And then when that balance sheet's tied down, then when you look at your profit and loss that, well, you need to make sure your expenses and things are coded correctly. But then you're looking at some pretty good profit and loss data, and you're looking at a solid net income figure. And then that's when you can just put the whole puzzle together and start, seeing how the cash flow works and things like that. So the fundamental accountings are a big area here. And that balance sheet also is important because of the current ratio, which I think is probably the most important ratio in pharmacy, because it shows you the liquidity strength in the pharmacy. And you typically see an average of 2.5 to 1. So that means that you have $2.50 of cash receivables inventory for every $1 of current debt. So, making sure your cash receivables and inventory is pretty tied down, as well as your current debt. What is current debt is important, because that's going to give you a good sense of that current ratio. If you're under 2 to 1, you're going to have, you have cash flow concerns. You're sweating when the wholesalers, come and do every so often. If you're 3 to 1, you're sitting pretty good. And, we're, going into 2024, a general rule of thumb would be you want to be 3 to 1 or maybe higher than that, 3.5 to 1 going into the year end. So how do I improve that current ratio? Well, then you start looking at your margin, you start looking at your payroll, what can I do on the DIR fee side? You start looking at any personal monies you're taking out. You start looking at that debt, and so on and so forth. So you can kind of start backing into what areas you need to address. So the fundamental accounting here is just paramount to preparing yourself for 2024, I believe.
So Scott, going back to
Yes, sir.
fundamentals and your balance sheet, am I understanding you correctly to say that really on your balance sheet, you're not gonna have, like, where would DIR fees show up on there? I mean, it sounds like if you're doing those on a cash basis, or that's the recommendation, you're not gonna have a liability or accounts payable to really show what has, in the Caremark scenario, what basically you owe them at any given time. So where would that show up on your balance sheet, or does it?
Yeah. So it won't show on your balance sheet because I don't know how to estimate DR fees. I mean, I guess you could take an estimate and accrue it, but we don't do that. We just show, DIR fees on a cash basis method.
Okay.
So they would not show on that balance sheet. But, getting that estimate for perhaps, my 4 or 5 months average of, or DIR fee for Caremark in 2023 here, that's kind of just like a number in the back of your head you can kind of plan for going into, going throughout the year of kind of how your, that current ratio needs to look and how your cash maybe needs to look, things like that.
One other follow-up question,
Sure.
and I'm sure most of our independent pharmacy owners probably know this, so I'll show my ignorance. But how you mentioned there's some differences between Caremark and the other PBMs. Is it just, are the other PBMs taking DIR out on a more routine basis? So as opposed to the full quarter or trimester later?
As far as I know, as far as I understand, Caremark's the only one that's retroactive. Everybody else, when you get that reimbursement, they've already taken out the DIR. Caremark, on the other hand, is, they do the retroactive clawback. So that's the one payer, and they're the huge payer for most pharmacies. That's the one payer that is the one you got to be planning for in 2024. You won't see a change with any of the others because it's already being clawed back at reimbursement. So when we talk about DIR fee planning, obviously, pharmacy is evolving, has been evolving. What you guys did during the pandemic was evolve and adapt and change. I mean, that's just continuing. It's not stopping. And the days of just filling prescriptions, those are not going to be what's in the future. There's other revenue that pharmacies have to address and bring in their communities, whatever that is. It could be the long-term care space, compounding, a niche product or service, clinical service. I mean, the list goes on of somehow diversifying that revenue to hopefully maybe some cash-based revenue and more and profitable high margin revenue, and growing into that healthcare center in your communities. I mean, the value that pharmacies provide their communities and patients is tremendous. And so I think there's a lot of opportunity here for pharmacies to really take that trust and that value and that care that they have with their patients and communities and expand on it. And you almost have to find whatever it is in your community. I mean, you could have, I mean, just one example pops in my head is a pharmacy was near a college town, and a lot of those college kids were doing overseas studies, and he had a niche in vaccinations for overseas, vaccination requirements. And, he was, making a great margin on those and cash. So it's just kind of things like that. What can fit in your community? But that's kind of where it's going. And again, I think it's a great opportunity. I think it's exciting if I was a pharmacy owner. But that's kind of, again, where it's going. So, anything you can think of, I know NCPA has been coming out with a bunch of different ideas, and they're pushing stuff as well. In fact, they got a webinar on Monday on the 2024 contracts, I believe. And I'll definitely be on that. I suggest you guys be on that as well. That should be some new updated information on this whole DIR fee thing. But revenue is something we need, pharmacies need to address. And whatever that is in your community. Just the days of just filling those prescriptions is going to be really, really tough. Expenses clearly is something to be mindful of. Knowing those key expenses, cost of goods, wages, DIR fees, those three items right there. If you can address those are going to move the needle. Those are the ones that are going to move the 10, 20, 30, $50,000 needle in your pharmacy. The office supplies is not. So, I would be focusing my efforts in those three areas. Wages, are my hours right? Do I have people sitting, kind of twiddling their thumbs? Am I using technology? Are there things we could be doing better internally? Just, addressing that any way you can, asking those questions. Cost of goods, maximizing your purchasing. Inventory management is huge here as well. Excuse me. Instead of having, cash tied up sitting on your shelf, $100 bill sitting on your shelf, managing that inventory, keeping it turned, MedSync, things like that, to keep cash in your bank, and obviously maximizing your margin on those cost of goods is huge. 1% of cost of goods is just a massive number. So these are the areas I would be definitely focusing on spending my time if I was in the pharmacy. From the DIR fee perspective, there's not a whole lot of things you can do, but there are things you can do, and we're going to get into a few of those things in here in a little bit. But DIR fees is something that to be mindful of as well. Owner distribution and draws. Do see some pharmacy owners not realize what they actually take out of the pharmacy. And that can be significant. And so, be mindful of that and how, that current ratio and how that cash flow is working in your pharmacy. So you're not taking out too much money and you're actually, draining your pharmacy of cash that it just doesn't have. So be mindful of that. Debt service. What is it? Do you have a line of credit maxed out and you're paying this extraordinary interest rate on it? Can you term out that line of credit? It's things like that to be thinking about there. Automation and technology is not slowing down by any means. So the more you can adopt and change and get in tune with that, hopefully the more efficient in the long run things will be. But you're going to have to look at it because it's not slowing down by any means. In fact, it's rapidly expanding. I just heard the other day that artificial intelligence is now the fastest growing technology in the history of the world. So, in a year from now, the artificial technology is going to be, who knows its impact in our business. I know that's for sure. I'm sure it's going to impact all businesses. So, something to be just mindful of there. Your PSAO. So this kind of ties into that, maybe what's going to be discussed Monday evening. I believe it's Monday evening with the NCPA and the contracts. Working with your PSAO, understand those contracts. What can you do to plan and prepare for those? I know a lot of the contracts for 24, I believe, haven't been released yet. There's maybe been a few, but a lot of them have not been released yet. So be on the lookout for updates there. Your pharmacy software, I would certainly be, if you haven't already, getting those DIR fee estimates in your pharmacy software. And this is a big one because we'll see pharmacies feel like they'll have a bunch of brands they're filling. when they adjudicate their, they see that $1,000, profit on it. And they think, hey, this is great. But then they get the DIR fee estimate set up in their system and they see they're actually losing $300 on the, as an estimate. And so, getting those DIR fee estimates in there. So at the time of adjudication, you can get a feel for how DIR fee is impacting what you're doing there at adjudication. And then you can say, well, shoot, I'm not going to lose $300 here. What can I do? Is there another therapeutic? Can I call the doctor? Is there another drug manufacturer? The drug manufacturer makes a difference with DIR fees. I'm told. So, getting those estimates in there is going to kind of give you that information ahead of time. And then maybe there's something you can do. And unfortunately, I've seen pharmacies have to turn down patients. I can't, I can't fill this for you. You're just a patient that's not a fit for my pharmacy. So, and that, I just think that's terrible, but that's just the way it is. So getting those DIR fee estimates in there would definitely be something I would be doing if you have not already. Your star ratings can play a part as well, MedSync adherence, and so forth, play a big part in DIR fee as well. Mindset. This is a little different, but mindset plays a big role here, because I can tell you that the pharmacy owners that we see that have a mindset of they are engaged in those DIR fees, they know, like I said, that a drug manufacturer is going to impact their DIR fee. They know, they have those estimates in place. They know their contracts the best they can. That mindset makes a difference as you go into this. And those pharmacies that are kind of passive, on the other hand, that they struggle more than those that are engaged in this DIR fee. And that's just what we see working with the, hundreds of pharmacy owners that we work with. So mindset, I think, is important. Control what you can control. Networking is huge. And just being, facing the challenge and tackling the challenge. I mean, again, you guys did it with the pandemic, and you just got to keep on pushing. So mindset's a big part of this. So I guess that concludes what I have for today. I'm happy to take any questions, expand on anything any questions you may have. But I appreciate you having me today. Hopefully I didn't put anybody to sleep.
No, that was a great job. We'll open it for questions. Anybody?
I do have one question, Scott.
Yes, sir.
I got interrupted while you were speaking. The DIR fee estimator, is there certain companies or names of software that are used for that, or is it just trying to build it in internally in your own?
I can refer Ben Jolly. I'm sure many of you have heard of him. He can set it up in your system. He charges a nominal fee to do that, but I know he's extremely busy. So if you're going to go the Ben Jolly route, you want to go ahead and get on his calendar. But he does it. He does it. And you may want to ask your script system as well. They may be able to help.
We use Epic. They're usually not much help for anything.
Oh, yeah. Yeah, Ben, I would go to. I don't know if Ben would have experience in that one. I know he does with the big, the Pioneers, the Computer RXs, those kinds of things. I don't know about the smaller system, but I did ask him that once, and he has done a few of these kind of one-off systems. So worth a call.
Appreciate it.
He's just worth a call in general. I mean, he knows this topic probably more than most anybody out there. So if you can pick his brain, do it.
Any other questions from participants?
But I appreciate again you having me. If you have any questions, feel free to reach out to me in the future. Ask Sykes-CPA.com and we'll respond to you. Again, thanks for having me.
Yeah, thank you all. Everybody have a wonderful day. Thanks.
Yeah.